What's going on, everyone? My name is Desmond, and I would like to introduce you to our new tool, which is going to help you with trading initial balance. We gathered 16 years of data, millions of data points, and this software is going to help you with filtering them out in a matter of seconds. The problem I'm currently seeing with other softwares that can do similar things is that it takes plenty of time to filter out the right reports, the high probability reports that you are looking for in order for you to make trade decisions. But these days, with Trump markets and all the craziness around the world, we don't have plenty of time to filter out in between dozens and dozens of different reports and different filters to find the high probability setups which we are looking for. And that's why we built IB Lab to fix that. As you can see, there is plenty of different filterings you can use. You can use days of week, you can use bias, you can use IB close level. I'll get to what everything means in a second. I just want to show you how quickly does it filter and how quickly it's running up. So before we dive deeper into all these data sets, I'd like to go on chart and talk a little bit about initial balance, because there's plenty of different opinions around the timings, what is it, etc. Firstly, I'd like to clarify, I'm no inventor of initial balance. I know it's been there for around 30 years, so we are not inventors, we are just here to improve. So what's initial balance for me? It's the first hour of the New York Stock Exchange Open. And there is plenty of data around these times. If you are at least a little bit familiar with initial balance, you should know that we have 97% chance, or around 97%, that we are either going to break highs or lows during the New York Stock Exchange session. So anywhere from 10:30 to 4 p.m. Then you might know that if we create lows first and highs second, we have around 70% chance that we are going to break highs first. And vice versa, if we created highs first and lows second, then we would have around 70% chance of breaking the lows. And I can already show it in IB Lab in a matter of seconds. We have Friday and we have bullish scenario since we created lows first, and we have 72% of breaking highs. If we created highs first and lows second, we would have 63% for breaking lows. The second very famous scenario is if we break highs, what we consider a break is one tick above highs, so that's breakout, not equal. If it only touches the highs and doesn't break it by one tick at least, it's not a breakout in our eyes. So we need to break out with at least one tick price movement above, and that's considered a breakout. Whenever this happens, we have around 75 to 80% chance of not breaking these lows. And also, if we break out lows, we have about 75% chance that we are not going to break out the highs. Now let's go back to IB Lab and we will quickly filter it out. So if we have, let's say, breakout in 10:30, 10:35 or 10:40, the data is saying that single break is going to occur in 76% of chances for bullish scenario. For bearish scenario, it would be 75.8%. And you can see again how quickly I filtered it. So these are pretty basic data sets around the initial balance. What can we do next is that we can filter out based out of the closing price of IB. Because in the past, I always had this question. What if we close in upper half compared us closing in the lower half? What do I mean exactly is that at 10:30 we close somewhere. We either close here, or what could happen is that initial balance could do something like this and at 10:30 close here, which would mean we have lows form first, highs form second, so technically we should still have 70% chance probability, right? So let's check IB Lab and find out what it's saying, because we don't have to guess. We can just look for the data. So we have Friday, we have bullish scenario, lows form first, highs form second, and then we want to see what happens if we close in the upper half. Concretely, what happens if we close in the range from -1 to -2. We can immediately see that we have almost 80% chance of breaking highs, and we have 83 days as a data set. This gives us a nice edge for us to want to continue stay bullish. But what if we closed in the lower half, let's say from -7 to -8? You can see that the probabilities change drastically. We now have only 13% for us to break highs and 80% for us to break lows. So what I know now is that if this happened and we would close in this area, I would want to look for shorts. I wouldn't want to look for longs anymore. Since in this case, high probability setup would look like this, and you would never know it if you just relied on lows form first and highs form second. You would still want to look for longs, but the data is saying something else. So now we know we have around 80% chance of us breaking the highs, which gives us a high probability target. So what do we need to know next is where to place our stop loss, because we don't want to just enter here, set a stop below the low and target 0.2R. That's too low. And data, it can also help us with filtering that. So let's go back to IB Lab. And what we can see here is that in most scenarios, we didn't go below level -4. If I zoom in, we can see that in 72% of cases, the price didn't go below this level, which gives us a high probability stop loss, because if it goes below that level, it means that we are not in the high probability scenario anymore, which means that we shouldn't go below here. That improves the R drastically. What I'm looking for next is to find out when is this pullback going to happen. Is it going to happen here or early in the session, or it's going to happen later in the session, maybe sometimes here. And that's where this report is going to help us. And what we can see here is that most of the times, specifically 86% of times, I can zoom it in again so you can see it better. We can see 86% of times the pullback happens in the first 20 minutes. So now that also gives us a time range where we should be looking for entries. And now a bit of discretion comes in, because it's up to you what confluence you decide to use in order for you to place the buy stop or buy limit or whatever. If you use order flow, you can use order flow. If you use trend lines, you can use trend lines. If you use ICT, you can use ICT. I personally don't really care. What I care about is the support of data. You now have a high probability data-driven trade. I personally like to use fair value gaps, so I would just jump on 30 minutes chart and I would set a limit one tick below this 30-minute low, which means here. So let's place it in. And now let's see what happens next. So let's click a little bit. Okay, we are tagged in and we are also hitting the target right now. So this is one way which we could enter. Another way which we could enter is maybe through some inversion. So we have an inversion fair value gap here. So I would be entering right there with stops below and targets here. So this is how we would form a high probability trade with confluence of ICT. So this is how we can filter out before retracement trades and form high probability setups. What you could also do is to filter out by IB by size, which is percentage size of the initial balance. Let me quickly demonstrate. We have gathered all these ranges because sometimes the volatility is higher and the IB is extremely high, and we measure everything in percentage basis because it doesn't matter if we are at NASDAQ at 30,000 compared to NASDAQ at 10,000, the percentage base is still the same compared to the points. The points are different, percentages stay the same. So that's why we used percentages. And you can see that you can filter based out of these filterings as well. But what I want to say also here, if we click on, let's say the percentage was 1.1 and higher, we only have 15 data points. We only have 15 data sets. And in my point of view, that's over filtering. Whenever you go below 20 data sets, the data can be skewed and it won't be as accurate. So I wouldn't recommend going as low as this, for example. And lastly, the filtration we have is that you can filter out based out of full history, last 10 years, since COVID, last 3 years, or last year. So you can check out the full history and you can check out maybe the more recent price. And we are not finished here. Now let's go to statistics after break. I will simply clear filters and go to statistics after break. I will also clear it here. So now I'm filtering long scenarios on Friday. And let's go back on chart, because what's now important is when the breakout happens. Price has different tendencies to do certain things when we break out early, for example at 10:30, or if we break out later in the session, for example at 12. And that's also something we need to consider when we are filtering out the data after breakout. So in this scenario, we confirmed or broke out at 10:55, which means I'll go to IB Lab and I will select 10:55, 11, 11:05, and 11:10 because I want to see at least 50 data sets whenever I'm filtering out breakout times. So when I have 50 data sets, I'm happy with that, and I can filter out the next steps based out of it. Okay, so now we have 50 data sets and we have single break of 80%, which means that there is only 20% chance of us breaking this low, which also means that we will want to look for long scenarios. Ideally, we want to see something like this. And IB Lab again is going to help us with finding the ideal zone and the time when the retracement happens, and also it's going to help us with finding the ideal target for us to hit. So now let's go back to the filtration. What we can see here is that we have host loss retracement and max retracement. What that means is that we want to see where we retraced, where do we typically retrace before we make highs or lows for the session, and where do we typically do max retracement. What we can see immediately pretty much is that we have the first three retracement levels are pretty high. Again, here, first three retracement levels are pretty high, and the fourth one, there's a dip, there's a break. So that means for me that I will be interested in searching for entry in this area. What happens if we break below this area is high probable that we are going to go lower. And that's not something I would like to see. What's the second area which we could consider as high probable is from -4 to -7. So that means that would be this area, -4 to -7. So again, now we have our stop loss retracement levels. Now, next thing, what we want to see is where do we target? What levels are high probability, which IB Lab can also filter for us. So firstly, the highest probability level for us is +1 to +2. There is 94% chance out of 50 data sets that we are going to hit that level. So how do I find that level? Is that I will move our retracement zones. I'll delete this one, and here is our extension level. So this is +1 to +2, and what I'm going to do here is I'm going to mark it green, and this is our high probability zone, which we hit in 94% of cases out of those 50 days. So that's our, we could say, TP1, and what we can see is as a next high probability target is definitely these two bigger levels or higher probability levels, which is anywhere from +5 to +7. How do I find them again? Is that I'll copy the retracement levels and we can select, we can find it here. So this is +5, this is +6, here is +7. So I'll delete it again, and this could be our second target. If we want to trail or if you want to play higher targets, higher risk to reward, that's up to you. But here is our high probability level, and here is our second high probability level. And now we need to go back to IB Lab to find out when those things are supposed to happen. So firstly, I would like to see the host loss retracement or a retracement before highs and lows happen and max retracement time. We can see that there is a high chance of us making the retracement in the first half an hour, even the first 15 minutes. It also happens quite often that in the first 15 minutes we make a retracement. So that means after the breakout in first 15 minutes, that means somewhere here, we make the retracement. Let's shorten it up like this. We make the retracement and then we never come back and just trend. So what I would want to see now is some kind of confluence from price action. For example, here we have a nice fair value gap, and that would be a nice confluence for my entry. And yeah, we now have when the entry should happen, we have when the retracement should happen, we have where do we want to target. So last thing is to find out when can we expect max extension? Max extension, I would expect to be anywhere from zero point 0.5 to 0.6. That's the highest probability. And we can see that in 19 days out of those 50, the max extension happened in the last 15 minutes of the session. So what we can expect is to make a pullback and then make an extension here and then a range a little bit based out of the data, and we can range a little bit. And in the last couple of minutes, in the last 15 minutes, so let's range a little bit more. And in the last half an hour, last 15 minutes, we should start shooting up, maybe to our second extension. So let's look at what actually happened. Let's go back to 5 minutes. So our entry is at 10 minutes fair value gap plus data. Our stop loss is below another data point. And now our targets are, first target is here, second target is there. And let's see what happens next. So I'll go a little bit faster. We have our 15 minutes. Actually, it didn't happen in 15, it happened in 20. So that's still okay, just a 5-minute difference. And what I would want to see now is ideally going into the first target, which happened now. So that's our first target hit. I would be personally taking profits definitely here, but if you want to swing for bigger fences, you definitely can. But expect the trade to take longer, because the highs of the session in 40% of the cases, in majority of the cases, they happened at the end of New York session. So now let's see what happens next. We are going up, we are grinding, we are ranging a bit. We hit the 0.5 already. So that's very nice extension, but we are still not at the end of the session. So it would make sense to continue, maybe trail, or to continue holding the trade, because we are still expecting the highs, this maximum level. Maybe I can mark it out like this. We are still expecting the maximum level to be hit at the end of the session, which happens here. So this is how the data can help you in finding out the bias and finding out the ideal retracement levels which you want to trade from, and the ideal extension levels which you want to trade from. And one of the biggest benefits of IBLab is that you can find it in a matter of seconds. As you can see, it changes immediately, it filters out quickly, it works very well. So now we have a couple of more filterings. We can filter out based out of single or double breaks. If we click on single breaks, we can see immediately again that we have even bigger difference between the minus 0.3 to minus 0.4. So I would definitely mark out these first three levels, first three retracement levels, and then you can mark out the next three retracement levels. So these are nice clusters I would be focusing on. Time-wise, it stays the same. Again, here it stays the same. And extension, again, pretty much all the same. So this is also what you can do to find out the highest probability, because we want to filter out single or double breaks as well, because we are always looking for the highest probability scenario, and single break is higher probability than double break. That's why we are filtering out the single breaks. Then what we can do is to filter out based out of the if highs form first in the first hour, or if lows form first in the first hour. Where do I use this filtration personally is mostly when we make a false break in the first hour, which means in this scenario, we made a correct break because we made first lows and high second. And where I use this filtration the most is whenever this happens, when we break the opposite side. So if we break out the lows instead of the highs, then I'm very interested in what kind of retracement are we supposed to make, because these type of retracements are very different from the usual type. So if we filter out the bullish scenario, which we had in this case, you can see that majority of the cases it's the same. So the first three buckets would still stay the same. But if we filter out the second scenario, the bearish one, we would see that we have much deeper pullbacks You don't have the first three buckets as dominant as it was before. We now have the -4 to -5 as the highest cluster, as the mode. So that's also something I use in order for me to form a bias. And lastly, again, we can filter out by size of the IB. Mostly what's going to help us here are the extension levels, because if the IB is super large, the extensions are going to be closer, and also vice versa, right? Because if the IB is low or small, the extensions are going to be further. So that's also something we can filter out. And lastly, the history. 10 years since COVID, last 3 years, and last year. One more thing we wanted to add for you to double check the data, because you need to trust the data, and in order for you to trust it, you need to see it. So what we have done is that if we click on, let's say, host loss retracement time, if I click with left button on this specific time, it will transfer me into charts, and now I can see the scenarios that happened in the past. Here I would like to say that someone is saying that you only need 6 months of the past data. You only need a year of past data. But from what I found out is that it's not necessarily true, because if we look at those type of data sets and we look at those days, we have Friday, February 6th, we have 2024, and we have trend days. We have trend, we kind of have a trend here, we kind of have a trend here as well, we have a trend here as well, we have trend here as well. Is it coincidence? I don't know, but it happens. We have false day, double break here. We have another trend day here as well. And you can see it's December 2017. And if we compare it to, I don't know, March 2025 or February 2026, the same things happen again and again and again. So that's why data is very strong. We have kind of a range day here, not super nice, but we have another range day here, which is almost similar to the previous one. Pretty similar price action. Again, sort of a trend day, we could say, here, and almost also a nice trend here for trailing maybe, or you can increase your stops if this scenario happens. And lastly, double break here in 2011. So that's also something we added because we wanted you to be able to see it by your eyes, to see it by yourself, so that you can trust it. So that's it for this video. I think I shared a lot of information. If you want to find out more, you can click on the link below this video. It's going to take you to waitlist, because currently we are only in beta test and we have a couple of people that are testing things out. So make sure that we roll everything out smoothly, so you can sign up for waitlist and get a bonus once we fully roll out. And that's it for this video. If you have any questions, I'll personally respond to any of them you ask down below in the comments, so feel free to ask. And lastly, if you enjoyed this video, please give us a like, give us a subscribe, help us grow, and we will definitely provide you with more in-depth and important data.